Happy April. Here we go, going live. Okay, let's see here. Who do we have who would like to come up on stage? Mr. Ondo. You're driving, aren't you?
I indeed am.
You are. All right. Sharon and Steve, welcome to the party. Hello.
Hi, you.
Steve looks like the Invisible Man. You didn't tell me you were married to a superhero.
Yeah, well, a superhero in many ways, but when he comes in the room, I never said that.
Well, this is being recorded, so you're kind of screwed there. People are going to find that out. Yeah.
Now it's permanent.
It's permanent. It is permanent. So
he'll be here in just a minute. His football team is playing, and there are priorities in life.
There we go. And I'm assuming football is not the American pigskin.
No, it's the round ball.
Yeah. So, well, while we're waiting for folks, we may have people joining us inside of either LinkedIn, or we're streaming this actually to my own personal Facebook profile, as well as to our LinkedBanker YouTube channel. If you are interested in joining Sharon and eventually her invisible husband, Steve, and Josh and myself up here on stage, you can pop over to the LinkedBanker.com. That's www.thelinkedbanker.com/happy hour. And when you go to that page, you will see a button that says join us live. That'll drop you down, and you then can go ahead and click on the join the stream and come on and be part of the conversation. So we're very much excited and look forward to seeing you there. So hopefully that helps, Martha. If you go to the www.thelinkedbanker.com/happy hour. And I may go ahead and throw that directly up into the LinkedIn chat as well. So there we go. So hopefully that helps for Martha to be able to get access. And Sharon, you dropped off. So Steve showed up and you just disappeared. So hopefully you'll come back. So let's see here. All right. Here we go.
He exists.
Ta-da. You do exist. Welcome, Steve. We thought you were the Invisible Man for a moment, but
it has been known.
Yeah. So did your team win? That's what we're all just dying to find out.
No. They drew.
No.
It's a two-leg thing. It's two.
Sorry to hear that. So anyway. All right. So while we're waiting for folks to join, just provide a little background. I think Sharon and Steve, this might be your first time on the LinkedBanker Happy Hour, if I'm not mistaken. So Josh is a frequent flyer, and I'm sure we'll probably see some other folks here, but the LinkedBanker is a networking and a mastermind community that we created back in 2020 to bring banking professionals. There she is. Pink is in the house. So it's a networking group. It's a mastermind community. And we decided, rather than just have private masterminds, which we do for our LinkedBanker community, we open these up for just happy hours. Anybody that would like to come on and talk and chat and just kind of get to know each other from a networking and an information sharing perspective can do that. And we are doing that today. So we got the FinTech cowboy in the house. Look like they shoved you off to the back shed there, Dave.
Yeah, I'm out at the ranch today.
Yeah, awesome. So Jim Perry, frequent flyer here on the Happy Hour. So welcome, Jim, and good to see you on as well, Paul. So so these are really designed. I have no agenda. There are no PowerPoint slides. There's no presentation. It's just I happen to be blessed with knowing a lot of people that, like me, care a lot about banking and community banking and innovation and having some fun and playing with technology. And this is an hour's worth of time that we've set aside to explore that and talk about stuff and what's on your mind and boasts and brags and whatever else is going on in your world. So I certainly have stuff that I can talk about. I was at the social media marketing world a couple of weeks ago in San Diego. I'm packing my bags and headed to Vegas to the Financial Brand Forum. If any of you are going to be out there, it'd be awesome to see you. But I like to turn it over to the audience and let you all chat about what's on your mind and what topics you'd like to talk about. And we'll just kind of take it from there. So who amongst all of you would like to go first with a topic or an idea or something that we'd like to chat about?
So this isn't the one where we learn about fishing?
It is not.
Wrong place.
Are you talking with an F or a PH?
I was wondering the same thing.
There's fishing, there's smishing, there's tishing. I'll throw a little trivia quiz out there for you. Anybody know what quishing means? What's that form of fraudulent behavior? I learned that on the digital banking school from our cybersecurity expert. You know what quishing is? It sounds kind of dirty. I'm going to admit that. And she said, of all the ones, that's the one I dislike saying the most. So to her credit, but it's QR code spam. So when you put a QR code out there and it's not a real link that goes to a real page, it goes someplace where bad guys are going to download malicious software and try to sideload something on your mobile device. Beware of the quish. I guess she didn't say that. That's mine. I'll totally own that because it was really bad. But so yeah, QR codes can be spoofed, and that's not a good thing. So anyway, all right.
Hey, Eric.
Yes. What's up, Jim?
Hey.
Kick us off, my friend. It's good to see you back.
Thank you, buddy. It's always nice to be at my desk for a while.
I know.
That's not going to last very long either.
So
unfortunately,
for those of us who don't know you or where you're from, I guess let's start off by just a little, why the hell should people care who you are? Because I know the answer to that question. And then let's talk about something.
Okay. Well, that kind of works. Jim Perry, Senior Strategist, Market Insights. This year actually marks the 20th year I've been doing this. Surprise, surprise. The great thing is I get to work with banks and credit unions all over the country, and I get to do a lot of neat things, including hanging out with Eric Cook every once in a while. Unfortunately, I will not be out at Financial Brand because while that's going on, I'm doing a series of workshops for the Federal Home Loan Bank. So it's a crazy busy spring. I just got back from Alchemy Collab in Nashville, Tennessee. Woohoo! Had a lot of fun down there. Got to actually be on the stage of the Grand Ole Opry. Look out. Had tons of fun with that.
What song did you sing? I can't wait. What song did you sing?
I'm sorry. What happens in Nashville stays in Nashville.
Oh, you chicken. I'm sure I'll catch it on social media.
Yeah, you never know.
There'll be a bootleg video somewhere, I'm sure.
Of course.
Well, it's true. There are cameras always, which is also a scary prospect. Hey, the little QR code thing you just mentioned reminded me.
Yes.
This is April the month of financial literacy, right? Financial Literacy Awareness Month. So if you've been looking at my LinkedIn lately, you notice I'm out there trying to educate people about the fact that there's a new organization in town called the National Alliance for Financial Literacy and Inclusion. I joined the board just recently. We're in the process now of kind of gathering folks from within the industry, community organizations, individuals that are passionate about financial literacy and inclusion to form this coalition to begin trying to get that alliance together to make sure that we're collecting the best practices and best information about what's working, what's not. We're trying to move people away from just checking the CRA box and actually doing more to partner with communities, partner with individuals to make sure we're doing a really much better job, especially with all that's going on in our economy, all that's going on in our world right now. I'd love to have you guys check us out. The organization, again, National Alliance for Financial Literacy and Inclusion. It unfortunately makes a very weird acronym.
I was going to say, how do you put that on a mug? That's a really long
It's
URL.
right. It's NAFLI. NAFLI. So it's
NAFLI.
www.nafli.org.
Cool.
NAFLI.org.
Nice. I would suggest, my dear friend, throw that into the chat so that it's part of the permanent record of this. But I appreciate you mentioning that. I know most of these chats are happening over on LinkedIn, but if you happen to catch this over on Facebook, or if you're watching the replay on YouTube, Jim gave us that URL. So definitely something to take a peek at. Somewhat related to that, I was in Wisconsin earlier this week, and I was teaching at their School of Banking at the WBA's office. And one of the things that I mentioned, somewhat related to financial literacy, but as it relates to AI, I feel like we should turn these into a drinking game. The first person that says AI has to take a drink. So here. There we go. Dave's drinking with me. But I talked about how AI literacy is going to be the next bastion of literacy and awareness, in my opinion. And I showed a couple of videos and I played some music, and a lot of the bankers had never seen golden retriever puppies playing in the snow, and they were shocked that that was an AI video from Sora almost a year and a half ago from OpenAI. And much like I beat the drum back in the day with Y2K, I was going around trying to get people not to pull their money out of the bank and stick it in their mattress because they were worried the world was going to end when 99 went to 2000, and tried to get them to understand what was and wasn't a real concern from a technology perspective. I think that is an opportunity for community banks to start leading the charge and educating financial literacy, cyber literacy, online literacy, now AI literacy. And if you do it right, they're going to hopefully catch things that might result in financial loss, but there's all sorts of other ways that you can find misinformation and get spoofed and be a disseminator of falsehoods across social media. I think that's the next layer of this from a literacy perspective. And I hope that that's an item that your organization will also take a look at as an important component of literacy in general. So
very much. I'm actually I'm teaching a course for the Perry School of Banking for Michigan bankers. I wish I could say that was named after me. Unfortunately, it is not. But one of the points I always try to make.
There's no Cook School of Banking. I don't know what's up with that, but whatever.
Yeah, really? Where's that? I know. The point I always try to make is right now you've got community bankers that are actually using AI tools because these tools are becoming so ubiquitous. They're embedded in more and more of our daily lives. But the banks aren't actually starting out with the very basics in terms of setting up their own data governance policies, doing all that kind of work that
Totally.
should be foundational
Yep.
before they start talking about doing anything on an enterprise-wide level.
Yeah.
So yeah, there's a lot of education that has to happen right now. You're absolutely right, Eric.
Good. There's your comment. I'm going to just throw it up on the screen. And I think Sean, I think that's the same one that you just posted, but that's their LinkedIn profile. So appreciate another one of the Mayos jumping in.
Brilliant.
There we go. So
We didn't even know.
yeah, well, there you go. That's why you've got other that's why Uncle Sean's taking care of business on the back end for you there. So and then when I asked for topics of discussion, he threw this in as a potential discussion topic as it relates to banking as a service and other sorts of fintechs. I really hope we get some time to pick your brain, Dave, on what's going on from a fintech cowboy perspective and what's changing, what's evolving, and what are we seeing on the new and innovative side of the fence as it relates to banks and keeping up with the Joneses. So maybe if we can shift, if you're good, Jim, we can shift maybe that topic of conversation over to you, Dave, and maybe give us a little who are you fintech cowboy guy and why should we care, and what do you have to share with us?
Oh man, I'm nobody. The company, I mean, the topic you were just talking about, one of the things that we do with and aside from FedFiz, also in Bankers Helping Bankers, and there's a Bankers Helping Bankers fund, and one of the companies that presented to us last week was called Protection Guard. And they're early in the game, but what they do is it's almost like a layer between your AI. So it will catch any, like you're talking about spoofing or putting in little, bat signal to drag all your data out, even though you've set it up on your own server and all that kind of stuff. So it's kind of a neat concept, just to kind of wrap a bow on that topic. And what was the other one you wanted to ask?
Very cool. Well, there was a question as it related to banking as a service. Sean posted something as it related to
Solid, yeah.
Solid in the middle
About Solid. Yep.
Yeah. So maybe chat a little bit about that.
This is like an ancient old topic for us, is the fact that the connector model was never going to work. And the connectors being, the units and the Synapse and Synctera and Solid, it doesn't work because I can't tell you how much Paul has in his bank account. I have to go to another ledger to do that. And of course, everybody that's ever been through an audit, that's what happens if the sky falls and this goes away. Well, you're shut out of luck. And that's kind of how that whole system was set up. Yep. It was an easy button. And originally, I think that was all done simply because if you're on Fiserv or FIS or whoever, as you want to add 1 million accounts, let's say you got Robinhood or whoever it is, that's expensive. And so people looked for a way to do a subledger off and then be able to just, audit those things and reconcile them back together again, which is a farce. That would never work in a million years. And we told them all that. And of course, we had to wait until it happened. And then with Synapse and Evolved. And the frustration, I think, with all of that is it sent, especially into the last administration, the regulators into hyperbolic mode and really scared the hell out of a lot of bankers. And with us, we look at this simply. I think there's something like 82% of the fintechs, of the 699 fintechs, that are involved on the deposit side. And so when you can create what we call a negative cost of funds, somebody is paying me and bringing me deposits, right? So I get to custodial these deposits. I get a piece of the interchange. This is one way that bankers have a massive opportunity if it's done correctly. And there are correct ways to do it. And the idea that it takes 1,000 people on your staff and all of this extra, that's all bullshit, brought to you by a consultant. And it just doesn't have to be that way. It's not very expensive to do. We've launched a direct bank for a guy for $120,000. So not our fee. We didn't charge him anything, but it is not super expensive to become a direct bank or to be a Bass bank. Or now, depending on what you want to do, you want to bring on 40 programs and you want to be really in depth on all this. That's no way to even think when you're starting. But what we have here is probably the greatest opportunity for community banks in a generation. And I tell people, here's your phone. Put a debit card on the table and put your mobile app at your bank on the table, and then just kind of mentally run down and buy me a hot dog. Well, you grab that debit card. Okay, come back up and buy me. I'd like to do a loan, and you're stuck. Okay, every single FinTech out there, you can buy a hot dog, you can make a loan, you can move money, you can do all kinds of different things with it. We call them the features of FinTech: buy now, pay later. It doesn't matter whether you agree with these things or not. The public does. There's a hell of a market out there, and yet we pay $10,000-$15,000 a month for a mobile phone or a mobile app that pretty much mirrors what your online banking does, and you still can't buy a hot dog with it. Now, when you begin to start looking at the new era in banking, and when I say the new era, look at the money that's gone into private credit. SoFi is trying to sell us $20 billion of loans. They're oversubscribing on the loan side. And this is exactly what Cross River does with Rocket. They'll bring in the loans, they'll run about 10% slush there, right? And then sell them on down through the syndicated market. Now, they're going to make fee income on that and maybe hold 10% just for the demand on each side coming through the funnel. These opportunity zones, if we perfect this in a better way, so for debt financing or other things like that, there's opportunities for banks to make a bigger spread than they make today and have it done in a compliant way, in a safe way. And I don't see anybody freaking out about we should shut down Rocket Mortgage and or Rocket Companies at this point. I think they just bought Redfin and Mr. Cooper. So, guys, it's happening. So it's not I love that commercial. It's not an option. That's about where we're at with this now. I think we have what we would call winners just on the banking front, of those that either have a good idea that they sat on for a long time, that it's time to let that go. I don't mean let it go. I mean let it loose, bring it to life.
Yep.
Whether that be working on IRAs or whether that be some other niche inside the bank. Those are great moves. And there's people to help. I mean, we help, other people help. There's some experts out there. And then there's the other, it's just like AI. There's a million phonies, I guess would be the way to look at it. There's if a bank wants to do their due diligence and figure this out, it's not that difficult anymore.
Yeah. Yep. Well, that reminds me of something else that I caught one of your posts on, and I'm super excited that you were able to make it. You had caught the recent FDIC news as it related to Bitcoin and cryptocurrency, and they kind of changed their tune a little bit. And you said something similar to that, like, okay, now we can do it. Hang on, because here comes all the snake oil salesmen going to help you do it within your bank. So and that was maybe a couple of weeks ago, if you had a chance to digest that, and then kind of outside of AI, but back to cryptocurrency and the FDIC, is that an opportunity that banks should go back and revisit again? I know that was taboo for a while, but is it?
This is something I stress to bankers all the time. We have a meeting, it's 1997, and we decide the internet sucks and we're not going to do a website. Okay, we're going to have that meeting again. And what I try to tell people is you don't have to decide anything. Just get in the game. Understand, learn, stay involved. And when the time's right for you, you'll figure it out and you'll see the opportunity. But you'll be so much more educated, just like what you guys and Jim was talking about with the AI front. Educate yourself and learn as you go. You don't have to be the tip of the spear at everything. But this is another area that, even in the fund, we're looking at stable coin opportunities and how this can be done right and done this in a safe way. And there's other people out there I've talked to that, want to run this a little bit, I would say, at more depth and more complexity, but smarter, where we set up like an entrance into a money market fund so that you could, just like a bank would run overnight Fed funds, right? Well, if you don't hold the custodial asset, and I need to make $100 million transfer in Bitcoin or stable coin, well, you've got to hold that money in there. Well, you wouldn't have to do that if you just had a piece of the money market and then say, okay, I'm going to pull money out, put in $100 million for 15 minutes, make the transfer, and then I'm back to my $1 or whatever it is. But you could use those types of things.
Cool.
And I would actually, if you don't mind me just jumping in, I agree with Dave 100% on that. I mean, there's no harm in getting educated in the business, talking to folks, understanding who the third parties are, understand who the good ones are, filtering out all the noise now, because I don't know, Dave, you may agree or not, but it could take a year to just get educated and make those contacts and even just build an idea of what you want to do. It's not like you can just go in and flip a light switch and suddenly you're in this business.
Exactly, Paul. This is the thing, and this is what the big banks do. And everybody's like, "Well, they spend so much more money on this. How can we compete?" Because they suck at it. We can spend a lot less money and compete better, and in so many different ways. I think Neil has made a good point of that over time too. The discussions I've had with him that everything in banking is not just a big bank game. So if you get smart enough and figure out how these things work and work along the way, and just your object of the game is to not win or lose or participate. It's just to be in the game, right? And so I think at some point out there, whether we all go, yeah, we've got it figured out, or we don't have it figured out, stablecoin is something that's coming. And I don't know if it's going to actually make it 100% compliant, or how's this going to work out, Dave? Hell, I don't know. I can't read the future. Yep. But I can tell you from what it looks like, it'd be something I'd want to stay on top of.
Yeah. The bankers that I'm hearing, to turn the table back to AI, time for another drink. Hold on.
Oh, there we go. Good man.
But I had a conversation just today and they were saying, yeah, our CEO said, we're never going to have AI in our bank. We're never going to let our employees use AI. It's too much of a risk. And I said, let me guess, you are never going to be on Facebook, right? And they kind of chuckled and, so to your point, it's like, you don't have to get on the field, but at least get in the stands so you can see what's going on and see what's happening. And, can we at least acknowledge, the cell phone is never going away. We're never going to have a world without these devices. We're never going to be without email. We're never going to be without LinkedIn and Facebook and social media. And we're never going to be without AI. So we'll probably never be without the influence or the capability of crypto or stablecoin or Bitcoin or whatever you want to call it. So can we at least acknowledge the fact that it's going to be part of our life forever? And why wouldn't you want to just learn a little bit about it so that when the light bulb goes off, you're not starting from a flat foot position in 2 years when now the light bulb happens and you're like, oh, I guess we need to get on this AI thing and it's too late. Or, oh, I guess we need to get on this stablecoin thing. Or, oh, I guess we need to give our employees access to email.
John Burns mentioned.
Yeah, I mean, I agree with you too. I mean, first of all, the bank that said that their employees aren't using the technology, spoiler alert, they are. They're just being very.
They're creating their own action figures, right, Martha?
They're being discreet about it, right? And then, to your other bigger point, Eric, is like everybody who's visionary in an industry, especially in an industry like banking, has to have a certain amount of curiosity. You can't just have blinders on to things that are coming down the pipeline. So, I mean, curiosity should be a requirement of anybody who wants to run a bank in this day and age.
Absolutely.
Paul, one of the points that we're all kind of dancing around is we know there are a lot of banks right now that are just sitting back, totally content to wait and let somebody else take all the risk, wait and take all of the and they're going to fall so far behind. And I think universally we keep having these conversations trying to light a fire under folks. But we need to keep doing that because we're really at one of those inflection points. It was about 10 years ago, I think, that I was sitting across the desk from a banker who had his arms crossed like this and was saying, the jury's still out on this mobile banking thing. I don't know if it's going to work or not. Well, of course, they're no longer around. And I think we're getting to that point where, if you keep trying to kind of like chip away at the edges of it without really prioritizing, making time to educate yourself and learn about these things, get the information, and there's plenty of sources for it now. That's the thing. It's like every state association I know is uh, chock full of programming to help kind of demystify and pull back from the buzz long enough just to say, look, folks, um, you know, pay attention to J.P. Morgan Chase and Jamie Dimon's shareholder letter this week. He didn't mention AI, but maybe once in one sentence. And it was only a simple acknowledgement that, again, it is so much a part of the industry and where we are now that it's going to require lifelong learning and reskilling within this industry in order to make sure you're surviving past the next decade.
Yeah, absolutely. Absolutely. So, boy,
Yeah, you kind of put a bubble in all this, guys. Whether it's stable coin, whether it's AI, whether it's debt financing, I don't care what we want to talk about. If you get to a point where you can go to zero on cost of funds or even negative on cost of funds, and you can get to a point that you get higher yield because you're not doing, the origination on your own side, and people are doing that for you. This is the price of not having a charter, and it's the value of having a charter. Okay, we don't have to do everything soup to nuts the way we always have. I also want to say one last thing, and this is the part that it should piss everybody off. When you, what are we talking about? 69, $85 million missing with the whole Synapse Evolve Bank and Trust thing, and they get a fine of $11.85 million. I mean, that was a mosquito. Sorry. That's exactly what I'm talking about. It's a mosquito. It's like fining Wells Fargo 50 cents. It doesn't matter, y'all. And what was the message there? Run fast, break things, and you'll come out way ahead from where you were if you had done nothing. Until we get to the point where we penalize bad behavior severely. And I've never seen a regulator do that. And I've seen them try on one case where they wanted to take all the guy's capital, which was weird. But other than that, I've never seen anything that seemed to be punitive to the point that somebody would say, oh boy, right? And I'm not trying to pick on those guys so much as to say, if we are overly risk averse, it's a penalty box for us. And I think right now there's a new era. There's so many things changing. And if we can increase our spread without taking those risks, and what my message to the FinTech people are every time, this is not a popular message, by the way, is stop acting like a child. I'm a bank. You want to bring me something, bring it to me at 100% margin. You figure out compliance. Don't tell me you got an API that does KYC. Actually handle the compliance so that what you bring me is 100% compliance. And then it's 100% margin, and I want to do business with you. Take that responsibility on just like the bank did. And for the FinTech guys, maybe it's Reg E, maybe it's Reg Z. It's not the depth of compliance that a bank has to go through. That wall is, the taller that wall is, the better our moat to be successful. And using that compliance is something as a strength for us.
Yep, absolutely. We got a lot of great comments rolling in. So I've got, Craig posted up a little bit ago about the auto dealerships. I know he does a lot of work in that section, thinking the internet was a fad. I heard people say Facebook's going to go the way of MySpace, and that's not going to live on. Surprise, shocker. RJ's throwing some good stuff in here, but Neil, you're being very patient, and rather than unmute and chat and talk, I know Dave's mentioned you. I caught a little post, and you had said something a little earlier about consumers actually have got access to AI. It's like car dealerships. How many people show up to buy a car now and you don't research the snot out of that damn thing, so you know exactly how much money you're going to pay? Customers are doing that as it relates to banking. And you had an interesting post this week, I believe, about someone going and using AI and calculating what their early withdrawal penalty is if they want to take their CD out a little early, and using it as a tool to show up as an educated buyer. Unpack that a little bit for us, that people that didn't see that post.
Yeah, Eric, thank you. I look around the audience here and I go, I've interacted with almost all of you on direct basis. So Martha, thank you for your time. You got a great group, by the way. I just spent some time with Martha. And what's
Were you
going
wearing
on
pink?
here?
I need to know that. Were you wearing pink or did she?
Was I wearing pink?
Yeah.
No, I
I mean,
didn't.
you got to dress. I mean, if you're going to go with Martha, you got to up your color game.
That's a wisdom that I didn't have at appropriate time. I just showed up probably like this. I don't know. But Martha's audience was still very welcoming, even with that. So,
Okay. All right. We'll give you a pass on that one.
Some great bankers on that call. Nonetheless, what you see here is that what's happening is that bankers are presuming that the counterparties are not really financially very astute. And a lot of things that bankers are doing right now, they did decades ago. And they said, back then it worked fine. Well, back then we didn't have these, folks. And when we got these, we started to be flooded with information. But how did we identify the information that was really appropriate to us, or just the ocean of data? Well, I'm telling you today, I look at the world and I see the banking environment changing dramatically because, yes, those people were flooded with information, but AI helps you sift through the flood. And Eric and I had a good dialogue about, but AI isn't always accurate. It has some hallucinations. It comes up with some numbers. And quite honestly, I don't know, Eric, if you and I talked about this, but I used a different AI and it was off by a decimal point. So instead of $3,000 of impact, it was 30,000, which was completely wrong. But then I used,
whatever, like Dave said, mosquito, right?
Yeah, 10 times. But the reality is that's going to get fixed. It's just a matter of time for the accuracy of these large language models to hone in on these issues. So what's happening and I think everyone on this call knows that my specialization is retail deposits. And I started in banking years ago, and I said, "Guys, you guys are treating this like it's trivial. Like nobody's ever going to be smart about managing their money. And you have these early withdrawal penalties that don't make any sense. There's just all this stuff." And they said, "Neil, that's just how it is. Just learn to live with it." And so today, now, here's what's happening. I'm actually not having to tell bankers that it's time for them to upgrade. I simply show them that the people that they negotiate with now have all these tools, and nobody has to be trained on how to use them to get the information and do the analysis to take advantage of the mismatch that we as bankers have put into the contracts. We bankers have written up agreements that don't make any financial sense, like 6 months of early withdrawal penalty. And most people will say, "Oh, the CD customer, they're not really paying attention." Oh, but if they knew how to deal with this, they would be more than happy to take advantage of the inaccurate early withdrawal penalties. So my client base is starting to go, "Oh, maybe we do need to be a little more proactive. Maybe we're not the ones." It's whether we decide to use AI or not, the counterparties are going to be doing it. And that's really what's changing. And I don't know if the rest of the audience has a take on this, but you can see how I've posted here on this. And I do a lot on LinkedIn to get polls and other things. And all of a sudden, people I've never met before are coming up to me and saying, "Wow, you're on this. This is something we should be thinking about." So it's been 15 years of activity. So it's like, okay, I was maybe a little ahead of my time, but nonetheless, it seems to be much more exciting today than ever before because of volatile interest rates. By the way, I'm sure everybody on here knows that the 30-year U.S. Treasury is up 50 basis points from where it was just 7 days ago. We're at 484. We were at 433 just 7 days ago. That's how volatile this market is. And people are making money, making decisions about their money, and they are going to be using tools that they've never had before to make those choices.
Yep. Armed and dangerous. You're absolutely right. So,
and that's moving very quickly. I mean, Neil, you make such a great point. And I think, again, we have to, as bankers and people working in the industry as consultants, we've got to help people understand how quickly this is moving, how quickly it's iterating, and how quickly some of these new tools are becoming embedded in things that people already use every single day.
Yes.
You know, the functionality of Copilot right now is incredible, and it's just the tip of the iceberg.
Absolutely. Yeah. So speaking of functionality of Copilot, probably one of the cooler action figures that I've seen in a while, Martha. So OpenAI, ChatGPT, their new 4.0 image generation, all the rage. Ghibli Studio. I've been turning myself into South Park characters and Family Guy and all sorts of other fun ones. We talked about that last month, Jim. Come on, where were you? But she
Hey,
did
I'm
recreate that book. Yes, she
just
did
giving
recreate
another
book in her
little.
character too. But from a marketer's creativity perspective, this last round of image capability and updates, as a creative like yourself, your mind's just got to be like on fire, all the things that you can think of to do. So maybe talk to us a little bit about where your creative brain goes with all the things, not calculating early withdrawal interest, CD penalty, and all the financial things that Neil's doing. But where does your creative brain go in all of this?
Well, I think like all of you, I still look at it as a tool, not a complete solution. But I think it helps me and some of my team get to ideas more quickly, or get a range of things to bounce off of. And I know, Eric, you posted something on LinkedIn. I haven't gotten to look at it yet, how you're using one AI to help the other one be better. And I would say I've got kind of probably a similar approach, where sometimes I'll do it, I call it a dance off. And
Yep.
so I'll say Chat GPT and, Perplexity, and I'll use 3 or 4, and I'll give them the same assignment and see what they get. And then I'll kind of pick and choose from different ones, and then pitch them back to the others, and try to cross pollinate. So
Yeah.
to see what I can get out of that, that's a lot faster than if I were just brainstorming with my team. So that gives us something to start with. And it's just astonishingly fast, and it's kind of fun. So sometimes Perplexity wins, and sometimes ChatGPT wins, and sometimes Gemini wins. But yeah, maybe I should start a little scorekeeping thing,
Yeah.
and see who's winning the dance-offs each time.
I'm probably a little more aggressive. I call them celebrity death match instead of dance offs. But I have the flashbacks to the claymation when they go into the ring and they've got, man, I wish they would bring those back. But you can have those, between the various language models, and see which one comes out victorious and who gets an arm ripped off. And so the celebrity death match claymation series was did not last nearly long enough, in my opinion. But yeah, I totally agree. And 6 months ago, I would have written off Google, because Gemini Bard prior to that was a joke. I actually had it say, that's really good, I'll get back to you on that. And then you're like, are you going to send me an email? Oh, I don't collect email addresses for privacy. Well, how are you going to let me know? I'll send you an email. And it's like, okay. And if the training data going into these models is on humans, is that what we sound like when we're trying to bullshit somebody and we don't know the answer? Is we just make stuff up? So maybe that's more of a mirror on our reality than it is anything else. But Gemini's getting a whole lot better, but you wouldn't know that if you just wrote them off and decided that it didn't work. Copilot has made some significant strides over the last week with some pretty significant announcements. And that was always the joke that, oh, you're in a bank, you're using Microsoft. Sorry, you've got to struggle with, it's like riding the Tour de France with training wheels on. Well, now they've actually got a legitimate bike you can ride, and maybe there's a chance that it can do some cool stuff. So it's constant testing and iteration. So absolutely.
I spoke to two different classes of high school students today, and they're really go-getters. They're already doing concurrent college courses. They're all interested in digital graphic design and things like that. And it was a really mixed bag on how many of them are using AI and experimenting with it. And I was very surprised because I fully expected all of them would be, because they're such high achievers. But I'm sure it won't be long before they are. And I told them about the action figure challenge. So I guarantee you they're all doing that tonight.
Yeah, absolutely. Absolutely. Cool. Is there a concern, and this is maybe for the group, when AI came on early on, there was the feeling that, we're just going to use it to augment our jobs and make us more powerful. I think some of the experts were feeling in the back of their mind that may not necessarily be what's going to happen long term. I think this is going to end up costing jobs. It's going to replace humans. And then we had AI is not going to take your job, but a banker using AI will take your job, or a marketer using AI will take your job, and they'll lean into it. But do you see or are you worried about AI coming in and causing disruption where clients won't need you? To Neil's point, consumers will just do their own thing. They won't need a bank for financial advice. Is that a concern that anybody is worried about right now today?
Hey, Eric.
Yeah.
I'm going to jump right in on this because I have some very strong opinions about it. Of course, most consultants do have strong opinions. That's why they're consultants. But
Consult me.
There you go.
Jim Perry, who has a bank school named after him. I'm not bitter or anything. So go right ahead.
Not bitter at all. That's what I love about you, Eric. I was saying down at Alchemy last week that we have to start being honest with ourselves and with our employees about this very issue, because there are aspects of AI, yes, that we're using right now to enhance our own creativity, our own kind of efficiency. But as agentic AI really explodes, and I am expecting that it will in significant ways over the next 12 months, because banks are already using it to automate parts of their lending processes, parts of their general security processes, all the rest that are absolutely going to have impact on the body count, right? The other thing that's starting to happen, and we're seeing this with some of our clients, where they're losing talent within their bank or their credit union because you've got an innovation officer that was brought in a year ago to help do this, that, or the other thing, to modernize, to make things more efficient, to help automate some of their processes, and they're running into they're bumping heads with the COO or somebody else in the C-suite, and they don't have the resources necessary because, again, they're sitting on old branches that they should have probably closed years ago and redeploy those financial resources. And those people are leaving. They're going to the banks that will kind of clear the decks for them to do what needs to be done to utilize some of these tools as they quickly evolve.
Yeah. Yeah. It's the question of, do you support a hybrid work environment? Can I work from home? And if you say no, you're not going to attract talent. Now it's, can I use AI? Do I have access to social media? It's those things that are going to be expectations of even new hires, not just from a retention. So the person that you talk about jump ship and could go someplace else, make more money, and be in an environment where they can grow and expand and fulfill their brain. But how are you going to replace that person if you're not allowing for that to be part of your organization because you're afraid of it? You're the CEO that said, we'll never have AI in this bank as long as I'm CEO. Well, maybe the bank's not going to be around long enough for you to really worry about that statement for much longer. So,
Amen.
yeah, but thank you for that.
You want to have good talent, do cool shit.
Well, I'd like to go back to what Jim was saying about body count possibly changing if they do have more efficiencies. So maybe maybe the body count doesn't need to be as low as they immediately think, because there's all kinds of stuff nobody is getting done.
Yes.
There's all kinds of stuff nobody is getting done. And it's astonishing sometimes that some of the basic block and tackle is not getting done. So maybe if people were really using AI properly and trained and nurtured in that way, they could be way more successful doing that other stuff that has just been sort of floating out there.
Yep.
I absolutely agree, Martha. And the problem is, again, nobody's being real honest about it right now. They don't know enough about how quickly some of this is changing and some of this is evolving. So instead, they're just kind of latching on to the buzzwords that are out in the industry right now. Don't worry, we're not going to do this, or don't worry, it's not going to cost jobs, et cetera, et cetera. But really dig deep and look at how it's going to impact your institution and make some strategic choices that honors the employees that you do have and works well to bring them on board.
Yeah, I would agree. And the ability to measure. So I've had that conversation with a number of banks, Martha, is all of the stuff that you're not getting to. That is a very difficult thing for someone not thinking with an AI mindset to get their head around, because if it hasn't happened, it's not able to be measured. And then there's a certain well, you're just talking in the ether, there's no way to really confirm that. And I think that's where a lot of people go to, how do I define a hard dollar savings, where if I implement AI and I can fire 5 of my 10 credit analysts, now I've got a direct cost, as opposed to I've got 10 credit analysts. Imagine if we could touch every one of our loans on a monthly basis and offer value to our customers for upsell or fraud prevention or other ways. There's no way you could do that with every credit for 10 analysts or however many you've got, but it's trying to put a value on the potential of the efficiency or the potential of the future. Or you could grow from $1 billion to a $5 billion shop without having to add staff and keep the same FTE. That's a really hard thing for a lot of people to get their head around, but yet that's the reality of what this has the potential to do, I think. And I don't know how we get that to be recognized or how we measure that, but I think that's an important message that we need to keep putting front and center.
Yeah, I remember the Apple Lisa, the first Macintosh, and don't worry. I mean, everybody will sit back. We're not really going to have to work anymore, and there'll be some job loss here. And it's like, heck no, man. It spawned millions and zillions of jobs. Worst thing ever happened to me in my whole life was to put email on my phone. Wow. So, I mean, the idea that, hey, this is going to cost jobs. No, it's a job creator. Technology always is a job creator.
Yep. Absolutely. So Dana's got a nice comment here as well. So just want to kind of draw attention to that. But yeah, where are we spending our time training? It's that upskill, that reskill. How do we, one of the slides I have for my presentation comes from the LinkedIn talent blog, and it talks about job satisfaction and how it goes up when you're teaching your employees new things and allowing them to be more valuable to the organization. It has an impact on their satisfaction because they feel like they're giving more and they're doing more for the organization. And this is that next, holy crap, I don't know what I'm doing. I don't understand this. If you can teach them that, then even better. So yeah, really, really good stuff. So
yeah, Dana's comment just now about the UDAP violations. This is where I think a lot of bankers are messing up, is that, maybe one day it's a great lending tool. Maybe one day it's a great deposit tool. But what it is right now is a great capture point. And so there's so much information that comes in to an institution. Any FI is going to have all their vendor contracts. They're going to have all their admin layers of, dashboard after dashboard. And then you've also got everything coming from the the people applying for a loan and all that type of stuff, whether it be insurance. I mean, there's just a zillion opportunities for AI on that side of the fence. But when we talk about FinTech or the rest of the stuff with UDAP violations, great point that she's bringing up. And I mean, if you take the simplest perspective, and I know this is overstated a little bit, but if you were to say, hey, let's make loans, I will bet you $1 that AI would come back and tell you that people that are impoverished are probably not where you want to make your loans, right? You should probably only make loans to rich people. And so there is that. And anytime that we employ that type of technology on compliance, we better watch it.
Yep, absolutely. One of the speakers that was at Social Media Marketing World, Christopher Penn, one of the brilliant thought leaders on the technology and kind of now the AI space and marketing and whatnot. But he actually ran some of his own tests against a bunch of language models and was running an analysis against resumes and other sorts of application data using his name, because he did a lot of stuff on student loans, ran his name as Christopher S. Penn, and then he took his Korean name and put that in, same exact data, same exact financials. And I'm paraphrasing, and I don't know the exact numbers, but when it was his Korean name, the likelihood of approval or discrepancy or problems shot up significantly to the point, and the only thing that changed was the name. And they've seen that tested. So the tendency of bias, that's one of the reasons why human in the loop is still so critically important in all of this. It's a tool. To Martha's point, it's not a replacement. You still have to have a human brain involved to look for the things that smell fishy, that don't sound right, that don't look like they're doing what they should be doing, that are going to put you into trouble. And just
Eric,
it with Ron Popeil is not the solution on this when it comes to the magic bullet. So
I agree with you in concept, but I'll say that's today.
Right.
That's where we are right now, because what he had mentioned, Stanford did a similar study about a year ago, and they identified that level of bias. But every time those biases are discovered, new guardrails are put in place.
Sure.
And it's evolving so quickly because it can happen. It can be iterated in the metaverse. They can do this more quickly. So what we're going to be looking at 3 years down the road or 4 years down the road, we begin to understand that what is causing us all to slam on the brakes right now can't be the thing that holds us back completely.
Oh, absolutely. Yeah. And I'm not saying don't do it. I'm just saying when you do it, keep that top of mind, because there's still 80% of that process that likely is still valid and true that will help you with the analysis and some of the other things. But we just need to be really careful of where it falls down, where it trips, and it's tripping less. And I could see, to your point, at some point down the road, the bias that we have as humans could potentially be offset and allow for an even equaler, if that's a word. If not, I'm going to make it up. It's probably more equal, but I'm going to say equaler because I'm being.
We heard it here first.
Yeah, you heard it here first. Hashtag equaler. But it's going to maybe compensate for some of the human flaws that are not treating people fairly and doing the things that we really should be doing, but maybe aren't, just because that's the way humans are. So that's just what makes us so darn unique. So
there you go.
Well, hey, I want to thank you for putting this on for everybody. I mean, it's fun stuff.
Yeah.
And I had sweet tea, I swear to God. So.
I did see you bring out your fishing pole, though. You're not going to go PHISA.
I'm rolling out the door right now.
I bet. So Sharon and Steve, I feel bad. You guys didn't even get a word in edgewise, but I have had the privilege of knowing Sharon through the Pacific Coast Banking School out in Seattle, where we both are faculty members and have had some nice conversations. Anything that you'd like to comment? This has been your first happy hour. Anything that you'd like to share or talk about before we put a bow on today's?
Aaron just told me to grab a drink. and come and sit and listen. And that's what I've done. So
there you go. You are the official happy hour steward.
I'm not a banker. I'm just Sharon's husband, and it's been quite interesting.
Well, yeah, so there is one thing I'd like to say. So many comments have been made that are all the synapses are going, but when it comes to AI taking jobs, I think the best answer when someone has that fear, and why wouldn't they, is let's assume the answer is yes.
Yep.
What are the new and or different ways we can use your skills? Because I don't want to lose you. Nothing sets people free like truth. And if the truth is potentially AI is going to eliminate your role, your job, we're more than the job we do that earns us money. We're more, that's a finite way we use our skills. It's a singular way we use our skills. Skills are transferable, they're broad, they get pulled, and they just have so many different ways they can be used to benefit the whole being wherever you work, or humanity or your family or whatever. And I think we avoid saying the truth because we don't know the thing to say after that. So let's just assume the answer is yes. AI will take your particular role right now that you're doing. That doesn't mean it takes you, it just takes the role you're doing. How else do we use your brilliance? I think we'd have great conversations if we did that.
Cool. Come back in May and let's tee that one up for the next happy hour. And we can start with that because I think that's wonderful. If just because the job or the function that you're doing can be, how does that free you up to do other stuff? Yeah. I would absolutely love that. So
when is the next one in May?
Second Thursday, whatever the date of that is. I should probably know that off the top of my head, but I don't. So hold on one moment, please, while I take a look at my calendar. It is May 8th. May 8th at 5 o'clock Eastern time. So, and then Jim Perry just posted a little note to me in chat. If you want to put that into the LinkedIn area as well. But there is a FinTech book club on April 11th. So talk a little bit more about that. There it is.
There it is.
It's like a pop-up.
Although I can't read it because you got to look at the camera.
How do I delete?
Yeah. So, but anyway, that is the 6:01 on my calendar here, Eastern time zone. We have burnt through 62 minutes very, very quickly. Always been really good and engaging, but this was actually, I think, one of the most people we've had come up on stage so far. We actually filled the screen, which is, I think, the first time ever since we moved these over from the audio only one. So if you are interested in checking out the LinkedBanker, and we're going to do our live mastermind this month from the Financial Brand Forum. So we're going to sneak away and go live, and our members get access to a private community that they're a part of. We're going to be doing that, but show up to these happy hours, tell your friends, bring more people. The more people here, the more ideas that we get, and the more conversations come out of it. So thank you so much for being on the happy hour, and we will see you next month, but I'm sure for many of you several times before then. So we're gonna put a bow on it and shut her down. So thank you, everybody. Talk to you later.
Thanks, everyone.
Bye-bye. Bye.